At the closing on the purchase of your home, you'll be required to sign what seems like an endless number of closing documents. Most of these documents are standard and required to be signed by buyers in every jurisdiction. We at Paragon Title specialize not only in the preparation of this multitude of papers, but also in doing everything we can to ensure that you understand exactly what they mean. One of the most important documents is the settlement statement, a summary of all of the charges associated with the purchase of your new home. This video will walk you through the settlement statement and explain line by line all of the charges that one might have to pay based on a hypothetical transaction for a home purchase in Montgomery County, Maryland. If a buyer was purchasing a home in the District of Columbia or Virginia, some of the charges that would be assessed would be different. However, most of the concepts and explanations are very much the same. Now let's start with line 303 of the settlement statement. On this line, you see the total amount due at closing of $121,711.97 based upon our hypothetical. This amount is calculated by adding together the balance of your down payment plus your closing costs. The sales contract requires you to pay this balance with either a cashier's or certified check or wired funds. Now, let's take a closer look at how these closing costs were derived. The details of your closing costs start on page 2. While the settlement statement breaks down the buyer's and the seller's transaction, in this video, we're focusing solely on the buyer's expenses, shown in the left-hand column of the settlement statement. Near the top of the page, line 703 is the administrative portion of the commission that the buyer agreed to pay in the buyer-broker agreement. Lines 801 through 803 show your loan origination charges. This is what the lender charges you to originate your loan. In this instance, the fee is 1% of your loan amount, plus $250 for processing. This fee would have been disclosed to you, along with all of the other closing costs, in the good faith estimate from your lender. Additional lender charges of $400 for the appraisal and $80 for the credit report are shown on lines 804 and 805, but also say POC beside them. POC means that these fees were paid outside of closing and are not included in the total of settlement costs, nor the total amount due as shown on 303 of this statement. They are listed only for record-keeping purposes. The tax service fee, listed on line 806, is a one-time charge to set up an account held by the lender to pay your annual property taxes. This concept will be explained more in detail later in this video. Line 807, the flood certification, is a one-time fee collected by your lender to get an assurance that your new home is not located in a flood zone. Prepaid interest on your loan is defined on line 901. In this example, the settlement is taking place on November 1st, 2012. The first mortgage payment will not be due until January 1st, 2013. While this feels like a free ride, it is not. Each time you make a mortgage payment, you're paying interest for the preceding month. That's called paying in arrears. Thus, the January payment will include your mortgage interest for the month of December. The entry on line 901 is interest for the balance of the month of November. On line 903, you see the cost of your first year's homeowner's insurance policy, with the entry POC beside it, showing that this premium has been paid outside of closing. Lenders typically require you to provide them with an insurance policy and paid receipt confirming the payment of the first year's premium prior to settlement. The cost for the renewal of the homeowner's insurance will be paid from the escrow account that you establish with the lender. Section 1000 on the settlement sheet, Reserves Deposited with Lender, is one of the more challenging concepts at closing. Each year, you have to purchase a new homeowner's insurance policy and pay your real estate taxes. Most lenders do not permit you to pay these obligations directly, but instead require that these bills be paid out of an escrow account that you fund monthly from your mortgage payment. This means that the monthly payment on your mortgage will not only include the amount necessary to repay your loan, but will also include 1/12 of your annual property taxes and homeowner's insurance premium. On line 1001, you see a charge of $4,200, which is your down payment towards each of these future obligations. Each month, the tax and insurance portion of your mortgage payment will automatically be extracted from your payment and deposited into this account, ensuring that there is enough money for your lender to pay these bills when they become due. Your lender will send you a letter each year informing you if your taxes and/or insurance bills have increased or decreased. Your mortgage payment will then be adjusted accordingly. After your mortgage is paid off, any money remaining in this account will be refunded to you. Section 1100 lists all title-related charges. The amount shown on line 1101 has two components, broken down on lines 1102 and 1104. The charge shown on line 1102 covers all of the fees associated with preparing for and conducting the settlement, such as settlement fee, title search, title exam, title binder, and other closing costs to the title company. On line 1104, we find the typically larger component, the lender's title insurance. This policy guarantees the lender that they have a valid first lien against the property, and should they ever have to foreclose, that the lender's interest in the property would be protected. The premium for the lender's title insurance is a one-time charge for as long as you have the loan. When lines 1102 and 1104 are added together, they equal line 1101. Owner's title insurance, shown on line 1103, guarantees you, as the homeowner, among other things, that there are no liens against the property other than those placed by you, and that the title is marketable. This premium for owner's title insurance is a one-time charge for as long as you own the property. If you ever refinance this property, you will not have to purchase a new owner's title insurance policy again. But you will have to purchase a new lender's title insurance policy. You may, however, be entitled to a discounted or reissue rate at that time based on your existing owner's title insurance policy. You will find detailed explanations regarding title insurance elsewhere on the Paragon website. Line 1202 shows the actual cost that will be charged to record the mortgage and the deed in the land records of the jurisdiction where the property is located. Typically, the largest costs at closing are the transfer and recordation taxes. In Montgomery County, there are 3 different taxes paid when a property is purchased. These 3 taxes are required by law to be lumped together on line 1203 of the settlement statement. In this hypothetical example, the buyer and the seller have agreed to share the transfer and recordation taxes equally. On line 1204 is the Montgomery County transfer tax, which is 1% of the purchase price of the property. The state of Maryland has a similar tax, shown on line 1205, called tax stamps. This tax is 0.69% of the sales price up to $500,000, and then increases to 1% thereafter for any consideration in excess of $500,000. This tax stamp tax is also discounted by $345 if the buyer is going to occupy the property as their principal residence. Finally, the state has another tax, called the state transfer tax, which is 0.5% of the sales price. If the buyer is a first-time owner-occupant homebuyer in Maryland, the buyer's share of the state transfer tax is waived. Since the buyer and seller have agreed to split these taxes equally, you will see that the lump amount in the buyer's column on line 1203 is equal to the sum of the 3 taxes shown in the seller's column on lines 1204, 1205, and 1206. Line 1302 is the charge for a house location survey. This is a drawing showing the outline of the lot and how the house is situated relative to the property lines. This fee can vary based on the size and configuration of the lot and the type of survey performed. The charge for a termite inspection is on line 1303, which is performed to ensure that the property does not have wood-destroying insects. Line 1400 is the sum of all of the costs outlined above. This number is then carried over to the front page of this settlement statement to line 103 in the left-hand column, where it's added to the sales price. The entry on line 107 is the buyer's reimbursement to the seller for property taxes that were prepaid by the seller through the end of the current tax period. property taxes for the next billing cycle will not be paid by you out of pocket, but instead will be paid by your lender out of your escrow account that was set up for you by your lender, as explained earlier in this video. Line 120 shows the total amount that you would have had to bring to settlement were it not for the credits listed in Section 200 below. The credits are the deposit on line 201 that you provided when you wrote your purchase contract. The amount due is also reduced by the amount of your mortgage loan. The sum of these two credits are entered on line 220, then brought down to line 302, where they are subtracted from line 301, which was brought down from line 120 above, resulting in the amount shown on line 303. This is the amount that must be brought to settlement in the form of a cashier's or certified check or wired funds. That's it, the settlement sheet, one of the most important documents in the closing process for you to understand. We look forward to working with you on a real transaction soon. For more valuable information about the process, have a look around our website at www.paragontitle.com or give us a call at 301-986-1114. That's 301-986-1114. Thanks for watching.